Welcome again, everyone, to this Friday ShareCafe Hidden Gems ASX Company webinar. We know in the markets they're very active at the moment. I wanted to get some stats on capital raisings from the new ASX website. I couldn't find anything, to be honest. So I couldn't even find any profiles on listed companies on their new website. So I think the ASX has still got a little bit of work to do. Today we are talking gold, base metals, coal, and financial wellness. In regards to housekeeping, as a registered user, you will receive a recording of all the individual company webinars next week, Monday next week. For financial advisors, this event is CPD accredited. You actually have to watch the event to get that CPD accreditation. If you want to ask a question, please type it in the Q&A box provided. And if you want to find any further information on any of these companies, please look in the search button on the right-hand side of the ShareCafe front page. Right, let's make a start. First up, we have Maximus Resources, ASX code MXR. It's got a market cap of around 20 million. It's had a one-year return of up around 135%. It is a gold and base metals developer. Maximus is an innovative, energetic and professional mineral exploration and development team with an Australian focus on a small suite of strategic commodities located in Western Australia. We have with us the Managing Director, Tim Wither. Tim is a mining engineer with over 18 years experience in exploration, operation and executive experience. Tim, over to you.
Thanks, Tim, and thanks ShareCafe for inviting us to tell our story. Maximus Resources, we're a junior mining explorer. We've got tenements located 25 kilometres from Cambodia, and we are in Western Australia, Australia's premier gold and nickel mining district. Maximus holds currently 48 square kilometres of granted mining tenements. We're located within 50 kilometres of 6 gold processing plants. Like Tim said, we're a new management team and we're focused on resource expansion and discovery for the next Waddle Dam. We've got over 60 plus untested gold and nickel targets across a 30-kilometre strike of a very fertile Spargoville shear zone. There's significant gold and nickel production from our tenements, including the very high-grade Waddle Dam Mine. We've got 8 million in potential royalties with 1 million in potential near-term Q1 next year, and a large data set to mine. We've got over 422 gigabytes of data to help us uncover the next Waddle Dam. Next slide, please. Corporate snapshot, we've got 120 million shares on issue, 21 million market cap. Top 20 hold about 30% of the company. Next slide, please. Next slide, please. Location. We are in Western Australia's premier gold and nickel district, if not Australia's, 25 kilometres from Cambodia. I've joked before you could ride a bicycle to our tenements from Cambodia. These are granted mining licenses and hosted the Waddle Dam Mine. I've mentioned the gold processing plants. We're also located 25 kilometres from BHP Cambodia nickel concentrator. This is the concentrator that will be doing Mincors Cassini's nickel ore in the near future, and it's a very prolific gold and nickel region that we're in. Next slide, please. The Waddle Dam Mine, it was mined by Ramelius. It completed in 2012. It's hosted in ultramafics in the komatiite with interflow sedimentary units through it. Very coarse gold. When mining underground, they saw seams of gold running through the faces as thick as your thumb. Mined under 270,000 ounces at 10.5 grams. Short strike, vertically plunging around 8 to 15 metres wide. It was mined down to 365 metres, so shallow in depth and potential for extension there. Next slide, please. The timeline of Waddle Dam and where we are today. It originally started off as a 3 gram open pit. It ended up producing around 53,000 ounces at 5.3 grams. Ultimately, the underground went mining 210,000 ounces at just under 15 grams per tonne. That was the cash cow for Ramelius. It was the building blocks for Ramelius. They were able to purchase Harmony's Gold Hill 50 for $40 million. Large acquisition for a junior mining company at that. And 2 years after that purchase, these tenements were sold to Taikin. Taikin found Redback and did not develop it. Those assets were transferred over to Maximus, and last year Maximus, unfortunately, we sold the Burbanks mill, releasing the company of all debt and refreshing the company for a new start. Next slide, please. Next slide, please. This is the Redback prospect. This is the focus for us. It's 600 meters from Waddle Dam. Significant similarities to Waddle Dam. Same geological setting, same structural setting, same initial grade and zones, ore zone thickness. It has a wide zone of this biotite ultramafic. We know that there's inadequate drill density. It sits 60 to 70 meters below surface. And we know that there's significant depth and strike extension. 440,000 tonnes at 3 grams, remembering that Waddle Dam started off its life as a 3-gram open pit. Next slides, please. This is a plan view of Redback and Golden Orb and S5 target. You can see those significant gold intersections, 16 meters at 6, 7 meters at 10. So these are spectacular gold intersections. We can see these high-grade intersections next to modest intersections. So very similarities to Waddle Dam, and if not, maybe Waddle Dam 2.0. Next slide, please. This is the slide that I think is the most exciting. It shows Waddle Dam and Redback to the left. These are the two bookends, 600 meters apart, and it shows very limited exploration between these two areas. There's potential for a drive across from Waddle Dam, and in the middle, we've just had recently a S5 target. And if we can pick up ore on the way across to Redback, it can pay for any development to get into Redback. You can see how open Redback is and the opportunity that we've got within between Redback and Waddle Dam. Next slide, please. S5, this is another great picture. It shows the proximity of Redback to Waddle Dam. Our S5, this was drilled on the first day that I joined the company, 3 meters at 83.3 grams per tonne, including 1 meter at just 7 ounces. We had another broader intersection of lower grade material, 22 meters at 0.6. It was 37 meters at 0.4. This is more exciting for us, a technical success, broad low grade intersection next to a high grade intersection. So that will be our focus and our drilling in the coming weeks to do RC drilling around a S5 target. And you can see the proximity of what I was discussing before about coming across to Redback. Next slide, please. Larkinville and Eagle's Nest. These are two resources. Larkinville is a shallow, high-grade resource. It's open on strike. It's got 3 grams, and we've got some further drilling to do there. Eagle's Nest. Eagle's Nest is where they discovered Western Australia's largest gold nugget. Anyone watches Gold Hunters has been out there, highly disturbed area. And we see a shallow open pit and potential underground there. So currently we're doing our environmental permitting for Larkinville and Eagle's Nest, doing our spring and autumn. And in between now and autumn, we'll be putting a scoping study out for both those projects and assign some valuation of those resources to the company. Next slide, please. Nickel opportunity. We're in Western Australia, Australia's nickel heart. Some very prospective, we've got 17 highly priority nickel targets, and you can see the line of nickel discoveries which end at into our tenements, which is shown in orange. Below our tenements was WMC. WMC was instigator for all the, if not all the discoveries of nickel in the Kambalda region, and through a series of ownership, WMC never had this ground to the north. So you can see where the real nickel occurrences stop into our tenements. So quite exciting opportunity for nickel for us. Next slide, please. Our Hill Ditch project, that's in the 7 kilometres to the north of Waddle Dam. There is a small gold resource there. The more interesting thing for Hill Ditch is there's our nickel. So we've got a 300-metre nickel gossan at surface. Below that, there are some nickel intersections, 2 metres at 2.4. None of the work has been followed up. And directly below these nickel occurrences, nickel intersections, there's a geophysics EM plate that's just never been drilled. And through the series of ownerships, that work just needs to be done. So EIS granting for Hill Ditch, and yeah, hopefully we'll be able to be successful and be drilling Hill Ditches as soon as we can. Next slide, please. So the strategic objectives for the company and the new team: drill near mine targets at our S5. So we've got 2,500 metres of drilling. A slight delay. RC drill rigs are a premium in West Australia at the moment, with borders being shut. And we've got some air core across our core farm paleo channel. We've got some diamond drilling with a plan of 2,500 metres of resource extension and infill drilling at our Redback. Target generation from geophysics. Low cost opportunity for a near-term gold production at a paleo channel. Flora and fauna started at Larkinville and Eagle's Nest and Redback in preparation for mining proposals submission, and some rationalisation of our tenements across our gold and nickel rights. So exciting time and busy time ahead for us, for our new team at Maximus. So thanks very much.
Thanks, Tim. Got to say, I love watching Gold Hunters. I think it's a great show. It tells you how difficult the gold industry is, though. So you've recently raised around 3.2 million, I think, back in September. Where are those funds going to be deployed? You seem to be sport for choice.
Yep, definitely focus for us. So we've got half of that money, if not our largest shareholder. So all of his money will be going into the ground. We've got around $200,000 to $400,000 we have earmarked for geophysics, reprocessing that geophysics, and already starting to see some benefits of reprocessing that data. The company and the remainder of funds is just setting the company back up to build, and yeah, like I said, $1.5 million is going to go into the ground. So setting up the company for that.
And how do you pick up such strategic assets in such a well-known gold zone?
So these assets have effectively been in the family for a very, very long time. So 2003, Ramelius was a spin-out from Beach Energy. It was led by Bob Kennedy. That then was the platform for a cash cow for Ramelius. They purchased Hill 50, large acquisition for that company. Those assets were moved over to Tykean, another Bob Kennedy controlled company, and Tykean ran into some financial challenges. Those assets were moved into Maximus, another company controlled by Bob Kennedy, and so it's effectively been in the family for a long time, and that's why it's such an exciting time for us to be able to get opportunity to have these tenements which have been pretty much locked up for such a long time. 25 kilometres from Kambalda, so you know, we're right in the heart of it, and pretty exciting to be able to get the opportunity to throw some science at it, change some beliefs about it, and you know, hopefully lead to some new discoveries.
And Tim, we've got a question here in terms of, you know, what are your kind of pricing forecasts expected to hold for nickel and gold out for the next couple of years? Difficult question. I know.
Yeah, I mean, so when we were doing the raise, we raised as much as we could at the time. Who knows what's going to happen next year?
And do you have any more a more specific time frame on when you think these dig reels will be available and the program?
Yeah, so unfortunately, we're supposed to be. I'm in Cambodia right now, in preparation for some drilling. We were supposed to be drilling this week, and the current client for the drill rig has extended their drill pattern, holding on to the drill rigs. I would do the same, and so we're busily securing another rig, an RC rig, and that's our priority to get into the S5 and the linking structure between Redback and Waddle Dam. So hopefully be able to advise the market and update the market during the week. I understand everyone's really excited to find out when we are started drilling. So we've been working quite hard in securing that drill rig.
And you mentioned that was a COVID issue, but is it also an issue as in regards to how busy it is out there at the moment as well?
Yeah, everyone's very, very well funded. That was the sort of theme I heard from diggers. Everyone's got a lot of money. There is a shortage of personnel, and you know, we've heard one statistic: 30% of our sort of workforce comes and the drillers come across. There are some drillers here and workforce that have been in Western Australia since the start of the year. So it's going to be very interesting come Q4, and people having to return to Western Australia and go back and see their families and potentially return to their families. So yeah, be interesting times ahead.
And on that note, we'll end that conversation. Thanks, Tim, and nice to see you.
Thank you very much, Tim.
Good luck out there. Next up, we have Legend Mining, ASX code LEG, market cap of 360 million. The company is an Australian exploration company. Its mission is to make value-adding mineral discoveries and utilise all available bases to maximise shareholder benefit. The company's exploration focus is on its nickel copper Rockford project in the Fraser Range. We welcome back the Managing Director, Mark Wilson. G'day, Mark.
Hi, Tim. Nice to be with you today. And our cover slide is an action shot from the field. And a lot of people are really interested to see these XRF guns in work. And that's our Executive Director, Oliver Kitty, on a core rack with the XRF or the Vanta set up on its little stand. And that's where we can get confidence that the sulfides that we're actually drilling do contain the pentlandite and chalcopyrite, which is the lifeblood of the company. About Legend Mining, as you said, a market cap of 350 million. Our shares have been bouncing around between 13 cents and 16 cents. We've got a series of options which are deep in the money. That's a source of a further $13 million of funding over the next 24 months. Our cash and receivables at the 30th of September was $31.5 million, which includes the Jindal receivable. And Legend spends $11 to $12 million a year on current expenditure. So when we talk about the fact that we're well funded for the foreseeable future, that's what those numbers translate to. We're quite unique in the junior space, and I still regard us as a junior even with that market cap, in that we really only have one project. It's the Rockford project in the Fraser Range, home of the Sirius discovery, which set the world alight in 2012. Our top 20 shareholders hold 65% of the company. So even though we're many shares on issue, very tightly held, Creasy Group needs no introduction to most of your listeners. IGO is the nickel miner in the district. Bailey Group, a high net worth from Perth. And Wilson Group is me. I've spent more than 6 years of my net salary from Legend just buying shares on market to acquire that stake. And the remainder of our top 20 hold 11%. And the next slide, please. And so the investment case for Legend, I've talked about the people. Our technical team has recently been bolstered by Oliver Kitty, who's been 10 years with Creasy Group as exploration manager. every deal that Creasy's been involved with in the Fraser Range for the last 10 years, Oliver's had his feet under the table. So he absolutely brings a wealth of knowledge to Legend when he joined us a couple of months ago. We've got a very large holding, and that'll come up later in the presentation. Nickel's our commodity. It's the green metal, future-facing commodity, and is no less than BHP's MD talks to this in nearly every public presentation he gives about BHP as a total. We've discussed our cash. You always hear a systematic approach from Legend going forward. And if you look at the graph on the right-hand side there, you can see where our exploration success has been the value driver, taking us from a 20 million market cap when we started this project in 2015 to where we are today. Next slide, please. Where our project is, 300 kilometres east of Kalgoorlie. I think the key takeaway from this slide is the infrastructure access with the transport corridor of the Trans-Australia Railway line running right through the southern part of our tenements. Next slide, please. The story slide, the left-hand map is the Fraser Zone. The Canadians identified this in the 1960s, analogous to the Thompson Belt, 2.7 million tonnes of nickel in Thompson, 300,000 tonnes only here, and Legend holds this dominant land position where we occupy nearly 100% of that central gravity high. Next slide, please. About our regional work programs, you can see the regional prospects, $4 million planned expenditure across the year. I think Hurley's the highlight one there, where we've got an air core program going at the moment. And it's really a process of moving loop and then air core to give us our targets for the deeper drilling. Next slide, please. This is now a video covering in the early part some of the things that I've already discussed. The location where we are east of Kalgoorlie, you can see the size. So this really is a scale play. We've got that dominant land position with the Trans-Australian Railway line, the 3,000 square kilometres. Mawson's our leading prospect. The other ones, Magnus, Octagonal, Shackleton, Worsley, Hurley and Crean, all in the pipeline for future work. Very important to look at this eastern mag, see how different it is from the tram track mag on the western side. Now zooming into Mawson. This is an intrusive complex, an axis of 16 kilometres by 6. It's interpreted as a cluster of intrusives. And as we zoom into this mag, you can see all of those holes in that mag interp is the interpreted intrusives. Back into the horizontal slicing of that mag, you can see some highs amongst the lows, but again, the main lows are those intrusives. This footprint here is where we did our 50 by 50 detailed gravity. And it's this inversion model of this 3D gravity, which has actually started to put some scale around this Mawson intrusion, which is the central one in that complex. You can see the air core drilling with the footprints of anomalous air core, eastern and western, where that sits in this 3D inversion model. And I think it's really important to understand that we really only have scratched the surface of investigating what is this modelled denser ore body. Not an ore body, I beg your pardon, a modern, a big, massive, high gravity rock. A couple of the holes that have given us the massive nickel copper. You can see how that gravity inversion model fits in the mag, the footprint, the geological map of this southern Mawson area. And now as we zoom back out of here, again, you start to get an idea of this scale of that Mawson intrusive complex, and all within 3,000 square K of the total project area. So I think you can tell from that we've got plenty of work to go on with. Again, the geological map just showing where our drilling's been, some of the successes we've had. And the next slide, please. One of our most recent successes is hole 23, which has got that 12.9 metres of massive. Assays are awaited for this. It's within a 90-metre mineralised intercept, and the structural observations point to a remobilised mineralisation. So what we're saying is there's something big that's close, and that's what we're looking for. And the next slide, please, which talks to our recently announced off-hole conductors. And I think the key takeaway here, when we drilled hole 7 last year and did the downhole EM in that, the downhole in a 14-metre zone of 1% nickel and 0.75% copper gave a Siemens reading of 1250 to 2000 Siemens. The off-hole conductor, which was 6,000 to 8,000 Siemens, was drilled in March this year, which gave us, amongst our 25 metres of massive, plus another 16 metres of semi-massive and heavy disseminated. So you can see that this conductor off hole 26 is really quite exciting. The next slide, please. And so the off hole from 25 is a much stronger conductor. It's interpreted as a vertical body that's 90 metres of mineralisation in 25, and the model suggests a strike of 80 metres. These are the two targets which will be the focus of our next drilling. Next slide. A quick work program, and on to another. Next slide, please. And just the summary. I hope you've heard a story of a very prospective project, a dedicated team, and plenty to look forward to in the future, especially those next 2 diamond holes, which are about to be collared today. Thank you.
Thanks, Mark. I love that animation. I think one of the challenges for a mining company is to kind of educate the audience, and I think that animation did a great job. Thank you. Just a quick question here. When will Legend schedule a more aggressive drilling schedule at Mawson? And what is the drilling strategy to get more rigs on site and get the project moving faster?
Tim, we're frequently asked that question, and look to my expenditure slides of 12 million total across a year. To go out there and just drill willy-nilly without focused targeting, I liken it to just pulling the plug out of your bathwater, and our funds would just dissipate into the sands of the Fraser Range, and everyone would then say, well, why did you spend the money so quick? You know, we've got a diamond rig going, we've got an RC rig, we've got an air core rig regionally, and something that the last presenter talked to in terms of getting people and teams to site to do things. Our downhole EM is already 4 weeks behind where our drilling is to date. That downhole EM is fundamental to our next targets. We literally cannot go any quicker than we're going at the moment.
And what do these drills cost? Is it, do companies buy these, or if there is a restriction in terms of your ability to get them?
Oh, not in Australia, Tim. I've tried that in Africa because of lack of resources.
Yeah.
But I think you would find most MDs would say, if you need a driller, go and find a contractor.
Yeah, right. I see. And the cash you have on your balance sheet, which is almost 10% of your market cap, is that strictly for drilling and exploration, or is there any plan to return that to shareholders?
Oh no! Look, we raised $20 million in July this year in a placement managed by Euros and Canaccord. I consider for a company with a market cap of $350 million, that's an appropriate cash balance, given that we're spending at the rate of 12 million a year.
Understood. And is there any M&A sort of opportunities in the market for you, given how well capitalised you are and with such a strong shareholder base?
Look, there's a lot of rumour about M&A in the nickel space, Tim, not just Legend. And I think the best speculation I can give is I think there needs to be one card to fall first. And once that card falls across the nickel space, I think it would be very interesting to see what happens after that.
And what is your view on the nickel price at the moment?
Look, I think the nickel price is the nickel price. I like to quote Mr. Abraham Lincoln, where he quoted to an advisor that prophecy is a very unreliable profession. Very
true, Mark. Very true. Mark Wilson, thank you for your time. That's all we have time for at the moment.
Thanks, Tim. Thanks, listeners.
Nice to see you again. Next up, we have Terracom Limited, ASX code TER, market cap of around 120 million. The company is an emerging company originating as a resource explorer with a large portfolio of operating assets in Australia and South Africa. The company is currently authorising a growth strategy towards delivering a mid-tier diversified operating and trading business and have a global focus on the development of high-yielding diversified asset portfolio for investors. The company also recently acquired Universal Coal. We have with us Craig Ransley, who's the Deputy Chairman. Craig, thanks for your time. He's in Dubai, so it's nice and early. Over to you, mate.
Morning, Tim. Thanks, mate. And thanks, listeners. Thanks for taking the time. Can you flick through? Thank you. So Terracom's been around since we listed in June 2010. And as Tim said, we've got a market capitalisation of just over 113 million. We've been through a rather hastened process in the last 12 months of repositioning the company to geographically diversify it. We have a very, very solid shareholder base. Some 56% of our shareholders are owning the register, and the share register is tight. We've got a hedge fund out of Hong Kong, OCP Asia, who've been with us for nearly 6 years now. Bonnie Thon in Australia, racing and horse and media legend John Singleton. The Noble Group, Ahmed, who are an African fund. And then we've got directors and management who just acquired a stake on market of about 9.4% of the company. Tim, next, please. So current operations and projects in Australia and South Africa. As we sit here today, obviously we have our producing mine in Blair Athol in Queensland, and we have our two main exploration target focuses, which are both thermal coal. However, Springsure is PCI, high value thermal, and then we have our operating mines in South Africa, as well as our growth expansion opportunities. Next, please. So our strategic outlook, and this is the important one for where we're going and what we're up to. Obviously, as I said, we've geographically diversified into South Africa and onto the African continent in general. We have seen, a growing political risk being a coal miner in Australia. So we have diversified outside of Australia, and we don't have any impact currently on our business from what is happening with coal sales into China. We are now basically diversifying and growing the company into being a bulk commodity miner with outside of our expansion into South Africa, which is extremely exciting and gives us another 9 to 10 million tonne of production. We're also moving into Guinea. And Guinea will be the first play for the company outside of coal. We're pretty excited about that. So we've got a target of 14 million tonne of thermal coal with our Elof expansion in South Africa. and that's that's current and very soon to be realised. And then we move into the bauxite in Guinea. Our eventual sales profile that we're looking for to move to is 4 million tonne of export thermal coal, 8 million tonne of domestic thermal coal, and 8 million tonne of bauxite. And that's already achievable with the exception of the construction of the bauxite mine, which we're packing our bags and we're off to Guinea next week, and the team hits the ground in the next couple of days. So that's exciting for us, the diversification into another bulk commodity, and we look forward to being the start of many in the African and on the African continent. EBITDA cash margin as we sit here today is 88 million, all from coal, and with our ELOF expansion in South Africa, we expect our EBITDA to hit around 120 million cash, and then we expect about 120 million of cash margin over the next 24 months from our bauxite. Next, please, Tim. So just a global footprint map, and as I said before, we are a producer, and we're over 10 million tonne. We're not an explorer anymore. Been through that phase and moved on. I think our primary focus now is construction of projects that are near term to market and close to logistics paths, so that we don't have any stranded resources and we're not pouring shareholders' money into something that will take 3 or 4 years to see the eventual cash being generated. So now the board's focus is all about shareholder return and cash flow. Next, please. Again, our as I said, commodity diversification. We looked long and hard at Guinea, and Guinea has gone from 0 to 44 million tonne of export bauxite in the last 4.5 to 5 years, and the in-ground reserves in Guinea at the moment represent 27% of the bauxite market globally. Next, please. So total mineral reserves, 73 million metric tonnes in that, measured 26, indicated 11, inferred 36. It's a pretty simple concept. The mine is only 23 to 26 kilometres from the barge loadout point, which we'll be constructing, and then we'll be barging the bauxite down the river to a mothership, a mother vessel. Our development program to first bauxite is 13 months from boots on the ground in the next few weeks, and so far everything's on track and looking good. Easy mining solution, continuous surface miners, small haul road, all of which has been approved, and then river barges, as I said, to a transshipment platform 25 kilometres from the Seagate. Typical bauxite mining operation in Guinea, no smarts or technical expertise outside of what already exists needed. Straight bulk mining opportunity onto the water and to the market. Next, please. Another thing that's highly topical in the market at the moment is we're finalising and we've chosen to go 8 or 9 months early to the market to finalise our refinance of our bonds. We've been working on restructuring, obviously, the company's balance sheet, and have done it progressively over the last 2 to 3 years. We put the balance sheet restructure on hold in August last year, basically when we as a board thought the market was turning, and made the acquisition of Universal. So that's done now. That's bedded down. The management team in South Africa are first class, doing a great job, and it'll end up being one of our best acquisitions to date, outside of the $1 obviously we paid for Blair Athol. So indicative terms is we'll be writing Australian 220, dollar per note, fully transferred. We listed on the ASX. And you can read the coupons, 3 years maturity. And what we are doing in line with this is also doing an unsecured listed bond for about $50 million, for the retail space, not institutional, and that the uptake and the interest in that, I must say, in the current climate is quite exciting. Next, please, mate. So that's just basically, outlining the ranking, security, etc. So really, what Terracom has done is, we basically bought Blair Athol in the last couple of years for $1. We've sold our Mongolian assets. We have bought a 19.9% stake of Universal last year in August. We started a hostile takeover in March, which we completed in June of this year. And now we're moving and to start construction of our bauxite. So, COVID, yes, everyone's talked about how it's delaying companies and doing this. At the moment, COVID's an inconvenience, which we have to learn to live with. But through COVID, we've, as a board, we've divested of Mongolia. As I said, we've bought Universal, adding 9 million tonne of production to our balance sheet. We have done our DD and moving with the acquisition of our bauxite project in Guinea. And the future's looking pretty exciting. There's a lot more consolidation coming online in our space, and we want to be a leader, not a follower. So that's it really, Tim, in a nutshell, mate.
Thanks, Craig. A couple of questions here. Can you talk a little bit more about the Chinese coal imports and whether that had an impact on Terracom?
Yeah, look, mate. No, we I think, mate, in BA's history, we sold only one load of coal to China. All of our coal, mate, goes to Japanese Korea and the sponge steel market in India. So China, from an Australian perspective, is not a client for Blair Athol.
Right, and your biggest client in South Africa is Eskom.
Yes.
There's some debt issues with them. How's that been affecting the Universal sales, if you like, if any?
Oh, look, through the COVID process, mate, we've seen some softening of 10 to 15% from an order book point of view, but coal's still flowing. We're still making margins. And at the end of the day, mate, South Africa, it's an emerging economy and everything has hiccups. But mate, Eskom are paying their bills and they're taking our coal. I mean, our eventual view and why we bought South Africa was to expand as much and as quickly as we could and take our oversupply and our overcapacity outside of our Eskom contracts and get that into the export market, mate, which we're now in serious discussions on port and rail logistics to enable us to achieve that. And obviously, that will significantly increase our margins per tonne.
And where's the opportunity in bauxite? I understand you're kind of diversifying away from coal. Where's the opportunity in bauxite? And one of the questions is kind of what could derail that acquisition?
Oh, look, there's nothing that could derail that acquisition, mate. We've gone binding and we picked up some security interests in that acquisition on the way through our DD process. And we should have that finalised and done by the end of this month. Cash is in the bank to pay. There's no issues from a actual corporate point of view. From a sales profile point of view, mate, we've already got 3 major clients lined up to take, every tonne of the project. And as you're probably aware, bauxite now is on the critical list for the EU, mate. So they can't get enough of it as we sit here. So.
And maybe could you just talk through the cost savings through the debt refinancing and the restructure, and the innovation around that restructure?
Yeah, sure, mate. Look, it is pretty exciting. I mean, if I told you the names that were currently in our data room from a debt point of view, you'd be highly surprised. But I'm not going to put it on webinar and have every green group in the world contacting them. So we probably, mate, we're looking at about 11.5 to 12 million a year saving on the new structure. And everyone has said, look, why are you going for an unsecured retail bond. I think the market at the moment, mate, is suffering. I mean, COVID's hurt everyone's superannuation funds, and mate, to get a yield of 10.5% paid quarterly is a good return in the current market.
And talking of yield, I mean, the universal shareholders obviously are now part of Terracom. They enjoyed a dividend yield in the past. What's the policy on dividends moving forward for Terracom?
Mate, speaking from a self-interest point of view, most of the board is completely aligned with shareholders. The only thing that is delaying the announcement of amounts of dividends and etc. Is the refi, and as soon as we have that locked away, which our intention is to have it completed in November, we'll announce to the market. But we have every intention, mate, and developing what we're doing on a cash flow basis and an operational basis, mate, is all about returning funds to shareholders, not about anything else. And the board are considering all sorts of alternatives at the moment, including buybacks. So.
Great, Craig. That's all we have time for. Thanks for your time. I know you're busy over there in Dubai and it's very early, but I appreciate your time, mate.
Good on you, Tim. Thanks, everyone. Bye.
Okay, next up we have Doe Limited, ASX code DOU, market cap of 130 million. It's only been listed for a month or so. It's probably the most talked about stock in the market. What does it do? It's a fintech company that operates a subscription-based financial wellness platform, which enables customers to spend, save, and develop wealth through a smart bank account and Mastercard debit card, I beg your pardon. We have with us the founder and CEO, Andy Taylor. He is the technology entrepreneur and the co-founder of Society One, Australia's first and leading P2P lending platform. Andy was also nominated for the Ernst & Young Entrepreneur of the Year back in 2015. Andy, thanks for your time. We've already got lots of questions. Over to you.
Thanks, Tim. Hi, everyone. Thanks for having me. I really appreciate it. And it's good to follow on from those presentations. So something a little bit different here, guys. But look, I'll jump straight into it. Doe, as described, we're a consumer-based fintech business. We're very much on a mission to democratize banking and make the world financially healthier. Some key highlights for you. We are a very capital-light, purpose-led consumer fintech and next-generation neobank. Unlike the traditional neobank model that you might be familiar with today, we've actually chosen to wholesale partner through a model known as banking as a service with an existing bank that can provide us the licensing structure and the ability to take deposits compared to becoming our own licensed ADI. This really allows us to disrupt the actual business model of banking, taking a SaaS-based approach and leveraging open banking. Our focus is very much on fostering financial wellness for our customers. What that means is we're here to help customers spend smarter, save more, and ultimately build wealth over the long term. What we've been developing over the last few years is an integrated AI-powered banking and wealth management application. We're actually fusing wealth management into the core banking system. Currently, we're live in the US on an invitation-only beta program. We launched that last November, and we're very close now to launching our full market launch. We've also recently announced a partnership with a regional Australia bank in Australia, and we're looking to launch with Mastercard in 2021. Touching on Mastercard, we're fortunate enough to have forged a global strategic partnership with them that really allows us to work with them locally here in Sydney on some of the key innovations around digital payments, which, as some of you may know, we're leaders in the world on. It also involves them helping us from an issuing point of view, as well as marketing support. And certainly we see the need and the opportunity to expand as SME banking over time, once we prove out the value proposition for consumers. Just want to touch on COVID-19 and what it's meant for our business. Thankfully for us, it's actually fast-tracked the world away from using cash and really increased the use of debit card and mobile payments. In a market like the US, which is where we're operating, As many of you may be aware, it was a very cash-driven society, some way behind digital payments and certainly contactless payments in comparison to Australia, which is actually Apple Pay's largest market. So what we've seen is due to lockdowns, there's been a mass increased awareness and demand for digital banking and investment/brokerage services. The impact that it's actually had on the economy and is still having is specifically the increase in the unemployment rate and the decrease in interest rates has really meant that people are looking to spend smarter, tighten their belts, and actually looking for more access to yield and investment opportunities, which is obviously something that we're advocating here. I'll touch on the problem that we're solving because, as I always like to start these presentations, we're actually solving a fundamental customer problem. If you look at traditional banking, it hasn't really changed much over the last 30 years, but what has become very apparent, thanks to the Royal Commission, is there has been a big shift away from servicing customers from what banking used to be. Our view on the banking landscape is the big banks in particular are obviously very big, very slow, very heavy, and quite frankly have been quite lazy in actually adopting new propositions to cater for this new emerging Gen Z demographic. They're still relying on declining net interest margin, very much unable to differentiate their core proposition. And from our point of view, have never really taken on the responsibility of financial education. And that really comes back to the business model that's underpinning it all. They've certainly become very crippled by legacy and service-based models that are branch reliant, and through acquisitions of smaller banks have really crippled the tech stack. And from our point of view, have not really been willing to innovate and disrupt and cannibalize their core business. And as many of you will know, post-Royal Commission, there is a trend of divesting their wealth businesses. In terms of the neobank space, we've seen this flurry out of Europe now locally around what we call mobile-focused neobanks that have really looked to focus on the opportunity to build better customer experiences and have gone and got their own banking license. This model, however, from our point of view, really dictates the need to offer undifferentiated products to the major banks to compete. From our point of view, it's not really solving the core customer problem around financial wellness. If anything, it's more price improvement based in traditional banking lending products. And certainly from our research, the number one problem that's always need to be solved, especially in today's market, is around helping customers better manage their money. If you look at the world population, in particular the US, which is where we're focusing right now, it's grossly unhealthy financially. You know, 57% of Americans are considered financially unhealthy. That's 138 million people. Debt levels are rising. For example, 45% of Americans with debt spend up to half of their income servicing that debt. It's a very high credit card driven model and market. Many Americans are not satisfied now with their present financial position, and obviously this has got worse over the last 6 months. And here's the interesting one we always pick up on. 47% of Americans cannot cover a $400 medical emergency expense. So really what you're seeing is this mainstream consumer market living paycheck to paycheck, even at the more affluent level that we're initially focusing on. Whilst they may earn over $85,000 a year, the way their lifestyle enables them, they're still living paycheck to paycheck. So the fundamental problem we're seeing that has never changed is how can we help people better optimize their cash flow, save more, and actually invest money to use compound interest to get them ahead. And it's shifting from this debt component of the life cycle to actually getting them into the thriving sector. If you look at the current landscape, this is how we see the world. You've got traditional banks there, which is version 1.0. You see the neobank models that have popped up over the last 3 years, which we believe is 2.0 on a similar business model. But really what we're advocating here, leveraging a wholesale banking as a service model with existing banks, is building out of financial wellness platforms that are purpose-led. And we've got some key competitors there in the US that have really already started this trajectory, albeit coming from a robo-advisory sense and getting more into banking. The key difference for Doe here is that we have deliberately started with the everyday checking account, because for us to do this job correctly, we need people to use Doe every day. This is all about controlling the money flow for customers so we can build smart technology to help them manage on autopilot. So we're very much SaaS-based in how we're approaching this business model. We're integrating with wealth management, and we're using AI and machine learning to build a fully autonomous money management assistant over time that is really dedicated to helping them live financially healthier. We call this a smart bank account. A little bit about banking as a service. It's a new term that's emerging. It might be foreign to a lot of Australian investors, but if you look at Europe, for example, this is becoming a bit of a thing. And you might have seen recently Westpac announcing their plans into getting into banking as a service. And what this means is banks that really have struggled to compete with fintechs have actually spent a lot of money on their infrastructure, are seeing the opportunity now that instead of building and competing, is actually taking a step back in that stack and saying, look, we have an asset here. Let's sweat that asset, work with fintech partners that will drive the innovation and take the marketing risk. And we will share the economics on what I call the commoditized infrastructure layer that you just simply don't need to go and build. What that gives us as a fintech is we can retain the customer ownership. We're generating proprietary data, which is essential to any AI-based model. We can actually obtain BIN sponsorship with Mastercard directly through the banking partner. So we become the affiliate, big cost saving. We can actually leverage a virtual balance sheet for lending purposes down the line. It means we can focus our business model and our people on being engineering and product led to build and drive R&D and innovation. It also allows us to scale rapidly and easily and cost effectively into multiple markets. All we need is one partner in each market. With a global partnership with Mastercard, the rails are consistent. And what I like about this model is it still leverages the trust and credibility of the bank that sits behind us, that's been around many years, providing that deposit guarantee to customers. That trust mark is still very important in today's world. Touched a little bit about Mastercard, but we're very thankful to have them on board, and we've been working with them now for over 2 years, both their US team and their Sydney team. Where we're currently at the moment, guys, is we've been in beta now since November last year with quite a robust, fully fledged MVP product. We've been building for a long time, and we're now ready to open this up. We have full open banking enabled interface. The core part of the proposition is that we encourage customers to connect their existing bank accounts and credit cards. So we can go back 2 years on that data to train the AI model so we can start to forecast and help them build a plan moving forward. We've got fully integrated budgeting, as well as our recently announced bills jar feature, where we actually start to provision money for bill paying through a dedicated virtual card. And the biggest innovation here is our JARS platform for savings, where we actually microtize goals and build a plan to achieve them for customers. The future of banking as we've seen it in our world is fully autonomous. If you think about Tesla for a minute, the analogy here is that driverless cars are coming quicker than anyone can imagine. They're going to be 100 times smarter than the customer in terms of being able to drive those cars. And I think over time, people will slowly adopt and there'll be a light bulb moment where a car with no steering wheel makes sense. I see banking and money management as going the same way. The biggest research we conducted was that customers really want help with managing their money, but don't want to do the work. If we could provide a tool that is fully customized, engaged, and personalized and automated, customers would become more passive in that engagement, but more gamified in how they see the results. So this is all about a process of automation over the coming years to start to really take on those key tasks like paying bills for customers, optimizing their expenditure and their cash flow, and growing their savings and investment goals. In terms of what we've committed to the market already in the next 12 months is 2 key features. The first of which we're really excited about is Autopilot, which is the first iteration of this autonomous money management. And we look forward to talking more about that soon. The second element is actually integrating fully managed investment portfolios, which we call wealth jars, and actually start to give customers access to packaged ETF products to earn yield on these savings goals. And this really forms the foundation of our movement into a fully fledged monthly subscription product. Ultimately, though, guys, our goal is to become a platform business. It's a SaaS-based business model. The data we're generating here on people's income and expense profiles is phenomenal. And in terms of unlocking that opportunity, ultimately, in the long run, we want to continue to partner with manufacturing partners that can tightly integrate new services into this platform where we share the economics. In terms of how we're making money right now, we're predominantly reliant on interchange, which, as some of you may be aware, in the US is extremely high in comparison to Australia. We're very fortunate to operate in a regime where interchange can actually underpin the foundation of this business model. We also take margin share on every deposit we generate our banking partner. But in terms of where we're going, this will become more focused on a subscription-based product and growing an ARPU share or share of wallet through the introduction of new services and features. If you have a quick look at how we stack up and where we play, there's some key neobanks that have come out of Europe, like the Revoluts and the Monzos of this world. You've got Chime that have been operating now in the US for about 4 years. They're focused very much on an underbanked segment, quite different to us, but are having great success. And to be honest, have really paved the way for us to introduce a digital banking platform because they've educated the market well. And then you've got the likes of Acorns, who started off as a robo-advisor, as well as Moneyline in the US. But just to give you a bit of a snapshot on valuations and money being raised in this space, there's a lot of money going into this space, and there's a lot of customer adoption that's coming from it. So we're pretty excited that we're really at the beginning of this growth journey, and you know, it's going to be a fun ride. Okay, guys, I think that's 10 minutes, so I might just stop there. Thanks for your time.
Good job. Thanks, Andy. Plenty of questions. We might go over time, but we've got almost 300 online, so let's go for it. Westpac and Afterpay. I mean, this is a competitive space. It's a big problem. It is a very competitive space, and you've got kind of Afterpay and Westpac talking about, you know, a new savings account to conduct the majority of their money management activities, including paying bills, withdrawing cash, and budgeting. I mean, they've got 10 million customers Afterpay. How do you, what's your competitive edge in this space?
Yeah, great question. So that announcement for us was fantastic because it really validates the model we're pushing here. Again, it comes down to business model innovation and where you take this. Where we're focusing on is a core customer problem around money management. And I would argue that buy now, pay later are actually incentivizing the wrong behavior for money management. So we're actually focused very much on getting customers ahead of their bills and building wealth. So wealth management is critical to this, but it really comes back to the Autopilot feature I touched on and how smart and how quickly we can scale this feature. It's fundamentally unique, and the value proposition from what we can see is very unique. From what I read about that article, it was very much focused on savings, but you know, our research is showing us that when you're paying 0.1% on balances, it's really not attractive. We actually need to use compound interest to help them get ahead further responsibly. And
so you've got to acquire customers. You've raised some money not so long ago. What will be your average cost of acquisition per customer, and the pricing behind the monthly subscription? Can you give us a bit more color on that?
Yeah, look, I'm not going to go into specifics. Obviously, you know, in this next phase, we're going to be focusing on core digital channels, heavily optimizing those channels through machine learning, specifically on Google's platform. You know, what we want to be focused on and show investors is that we are not going to report vanity metrics. We are going to focus on KYC customers that have an account that's activated, funds deposited, and card usage. So that's pretty critical because that drives the foundation ARPU growth. In terms of subscription, again, I don't want to give too much away there, but our thought process there is we are going to be more focused on a base value level and then have variable levers on top of that based on the features and services we go into. So we are positioning this as more of a premium mass market approach to money management. So everybody should be able to benefit from the same feature set. We do not want to discriminate with the feature set.
And there's questions here about the US and the timing to an official launch.
We are very close to an official launch, as we promised. So as I said, we've been in beta since November. You know, the IPO, the fundraise was the catalyst now for us to really open this up. So we're pretty excited.
And is there any issue around data ownership and privacy?
Look, I mean, if anyone understands open banking, and certainly this is where America is very ahead of the rest of the world, they've been operating open banking in an unregulated sense now for a few years. And just so you know, we've got 80% of our customers connecting existing bank accounts. So we've got high penetration on open banking usage that we're actually gives us up to 2 years worth of data on individuals, income and expense data. Now, obviously, we are not the ones storing those credentials. So we work with a third party to tokenize those credentials. We don't store them. We actually don't really store anything to do with those credentials. So it really, the customer giving us the authorization to pull a bank statement on them ultimately.
And I don't think I've ever seen a stock so well supported and so talked about in the market in regards to your share price over the last month or so. Do you think it's got ahead of itself?
Oh, look, firstly, we're humbled. And I think what we're seeing is a lot of people having strong belief in the business model and what we're trying to do. And actually, I think trying to see that we're trying to disrupt, we're truly trying to innovate and disrupt here with a new business model. You know, we've always taken retail investors on the journey because we want our customers to become shareholders and vice versa. It's a big part of our marketing strategy. Obviously, why we're excited about launching locally as well. So I think it's fantastic. I think investors now are seeing the headwinds that are happening at the banking level, at the economy level, and just the mass adoption now of these digital-based businesses is driving that.
And how many shareholders are actually on the register now in terms of retail shareholders? Do you have any idea?
That's a good question. I don't. I would have to go and have a look. I assume quite a few.
Yeah, I would have thought so too. Okay, and then when you raised, there were some options that were issued to yourself and others. Can you, and they were both performance options and performance shares. What are the hurdles and the restrictions around those?
We've weighted them exclusively to growth metrics around customer acquisition. So I think the 3 tiers are 10,000 customers, 12,500 customers, and 25,000 customers over the next 3 years. So, you know, look, board management are fully incentivized to really throttle the growth. We realize scale is important in these games. And once we cement that MVP product market fit at the level, we're going to go very hard, mainly on viral acquisition focus to scale this quickly.
And just back to that, do you have any idea what that cost of acquisition is?
You've asked me that before, and I'm not going to go into that right now.
Okay.
But, you know, it's safe to say that will optimize very quickly over time once we get the algorithms working and actually tracking through to the marketing funnel, which for us is all around click to download of the application and onboarding.
Okay, great. Andy Taylor, thank you for your time this afternoon.
Thank you very much.
Sorry about that. I think I muted myself. That's all we have time for this afternoon. Thank you for being on this Hidden Gems webinar again. We'll see you next week.